Good morning, this is XPulse AI Morning Mix. I'm Iris. Today is Monday, June 29th. We're talking Nvidia's eye-watering cash flow, Apple's on-device AI reset at WWDC, and the new reality of enterprise AI budgets. I've got Orion with me. Ready?
Ready. Let's get after it.
Yahoo Finance reported on June 27th that Nvidia generated $48.6 billion in free cash flow in Q1 fiscal year 27, and it's sitting around a $4.8 trillion valuation. Orion, what jumped out?
Two things. That free cash flow number is enormous, and it's happening while demand stays intense globally. The same piece notes GPU prices rising in China, even with a Blackwell ban there, which suggests buyers are still finding ways to secure compute, even if it's older parts or constrained supply.
How does a Blackwell ban square with prices going up?
Bans don't remove demand, they distort it. If top-end supply is restricted, buyers bid up what's available, and intermediaries get creative. It also tells you the market isn't just latest chip or nothing. For many workloads, last-gen accelerators still print money.
And that free cash flow, what does it buy Nvidia besides bragging rights?
Leverage. It can fund faster product cycles, tighter supply deals, and more software and networking stack lock-in. Also, it gives customers confidence Nvidia will keep shipping at scale. $48.6 billion in a quarter is the kind of number that makes a CFO sleep. Briefly.
Investing.com wrote on June 28th that Apple used WWDC 2026 to signal a reset toward on-device AI, including AFM3 Core Advanced, a 20 billion parameter sparse model, and an AI-focused chip roadmap. Orion, what's the real move here?
Apple is doubling down on privacy, latency, and cost control by pushing more intelligence onto the device. A sparse model, where only a fraction of parameters activate per request, can deliver strong capability without always paying the full compute bill. It's a very Apple approach. Integrate model, silicon, and product.
What should listeners understand about sparse without needing a PhD?
Think of it like a team where only the specialists you need show up to each meeting. You don't wake the whole company for every email. If Apple can do that reliably, you get faster responses, better battery life, and fewer cloud round trips, while still improving features across iPhone, iPad, Mac, and Watch.
They also teased more AI-focused silicon, M6, M7. Is that just marketing?
It's a roadmap signal to developers and enterprise buyers. Build with on-device in mind. The hardware will keep up. It also reduces dependence on cloud compute, which is expensive and capacity constrained. Your phone isn't becoming sentient, it's becoming budget-aware.
MarketScale reported on June 28th that enterprise AI is hitting an inflection point. Companies are reining in spend, capping usage, and demanding measurable results. It also says OpenAI claims enterprise customers are now over 40% of its revenue. What's changing?
The honeymoon is over. Buyers are moving from experiment everywhere to prove it in production. That means tighter governance, unit economics, and fewer blank check pilots. Vendors are responding with cost controls, more predictable pricing, and outcome-oriented deployments instead of just selling model access.
When a company caps AI spend, what does that do to projects?
It forces prioritization and better engineering. Teams shift to smaller, targeted workflows, caching and retrieval, model routing, and cheaper inference paths. You'll also see more measurement, time saved, revenue uplift, risk reduction, things finance teams can actually sign.
Does this slow adoption or make it stick?
Both, in sequence. Some hype-driven projects stall, but the survivors get hardened into real systems. The market starts rewarding reliability and cost discipline, because nobody wants an AI line item that behaves like a surprise subscription box.
Bloomberg reported on June 28th that Australia's Firmus Technologies will build its first data center project in Indonesia in partnership with Nvidia, and says the deal could bring as much as $30 billion in committed offtake agreements. Orion, what's the headline here?
Southeast Asia is moving from demand region to build region for AI infrastructure. The eye-catcher is that potential $30 billion of offtake, basically customers pre-committing to capacity. Pairing with Nvidia also signals the stack, accelerated compute, validated designs, and an easier sales story.
For people who haven't tracked Firmus, what do?
Firmus is an AI infrastructure player. They develop and operate data center capacity aimed at high-density compute and they're trying to secure long-term customers who need guaranteed GPU access. Think compute landlord, but with much higher power and cooling ambition.
What makes Indonesia strategically interesting for this?
It's about land, power build-out opportunities, proximity to fast-growing digital economies, and regional diversification away from a few saturated hubs. The hard part is execution, permits, grid reliability, and construction timelines. Of course, the easiest data center to build is the one in a slide deck.
Let's widen the lens. On the services side, what are we hearing about labor markets and outsourcing as AI rolls in?
NDTV Profit covered a JP Morgan note on June 28th, warning India's IT services sector could see an extended slowdown. JP Morgan frames it as an early deflation stage. Automation boosts productivity, so demand for legacy services softens, and the recovery could take years, especially with geopolitical uncertainty.
On the model front, are export controls reshaping who ships frontier systems?
TechCrunch reported on June 27th that Asian startups are launching frontier-ish alternatives as U.S. export controls bite. One example, Tokyo-based Sakana AI announced Fugu, positioned as comparable to Anthropic-style systems for markets where U.S. labs face restrictions. Expect more regional champions and more fragmented access.
Meanwhile, all this compute has to be financed and powered. What's the money doing?
Bloomberg on June 27th said tech equity sales are surging to fund AI spending, raising leverage concerns. Money Control also on June 27th noted billions flowing into power and data center firms as demand climbs. Bloomberg NEF projects U.S. data center capacity needs above 77 gigawatts by 2030, up from 41 in 2025.
And the hardware supply chain? Any interesting angles beyond GPUs?
South China Morning Post reported on June 28th that Chinese chipmakers are betting on silicon-carbide power chips for efficiency and heat resistance in stressed data centers. On policy, Politico on June 27th described industry turbulence after a White House reversal pushing tighter reviews on advanced model releases. Business Standard, also June 27th, flagged AI money reshaping U.S. politics, including a $5 million pledge to Representative Byron Donalds. And Hospitality Net on June 29th, a new AI hospitality alliance launched with 12 founding partners to push responsible adoption and standards.
That's XPulse AI Morning Mix from XPulse for Monday, June 29th. If this helped, share it with a colleague who likes their AI news clear and concrete. See you next time.